What's up, good people? Thanks for dropping by. And for those of you who are regular viewers on the channel and have subscribed and hit that notification bell, we're grateful for you always checking us out. If you haven't done so already, please hit that subscribe button, hit the notification bell. You don't want to miss any of the content on this channel. In today's video, we're going to continue on the series on optionstrat.com, and we will be talking about another exciting option trading strategy that you really want to look at if you're a beginner, and this is the cash secured put. It's an income generating strategy, or for some people, it's a cost reduction strategy for when they want to buy a particular asset at a particular price. And we will get into all of that. All right, let's get it. So what is a cash secured put? Let's imagine you want to buy 100 units or multiples of 100 units of the underlying asset at a particular price. You have two options. Option one, you place what is called a limit order to buy the asset at your target price. So that means you're telling the exchange, only buy this asset for me when the price drops to my target price. That's option one. Option two is you sell a cash secured put. And the difference between a cash secured put and a limit order is that with the cash secured put, you get paid a premium for taking that chance. In both instances, your funds will be blocked for when the price hits your target so that there's available funds to buy the underlying asset at your target price. The only other difference also is that with a limit order, you're not tied to buying multiples of 100 units. But with the cash secured put, you get to receive a premium for agreeing to buy the underlying asset at the target price. If the put contract expires without the price dropping to your target, you get to keep the premium that you've received at the beginning of the contract, and your funds are released to you, and you can then sell another cash secured put for the same asset at the price that you determine. Otherwise, you could get assigned, which means that the price of the underlying asset has hit your target or has dropped below that target, and you have to buy the underlying asset at the price that you have prescribed. So let's look at an example with Microsoft. Microsoft is trading at $241.58, but you've decided that the fair price you want to pay for Microsoft is $225. As we've mentioned previously, you can put in a limit order, and if the price of Microsoft drops to $225, you will buy it at $225. The flip side is you can do a cash secured put. And in this instance, the Microsoft 225 cash secured put that expires on the 30th of December 2022, today being the 20th of December 2022, the Microsoft cash secured put at $225 is trading at 50 cents. So what this means is, even though Microsoft is trading at 241.58, you have sold a cash secured put and you will receive 50 cents per share, which translates to $50 in total, not counting the fees. And if the price of Microsoft stays above 225 by the 30th of December, which is when this contract will expire, you get to pocket your $50, and the money you put down as collateral to buy Microsoft at $225 will be released back to you, and you can sell another put. The flip side is that the price of Microsoft drops below $225 on or before the expiration on the 30th of December. What that means is you have to fork out $225 multiplied by 100 units to buy Microsoft at $225, because you're receiving the $50 premium commits you to buying Microsoft at that price if the price drops below the 225 mark. I hope that makes sense. In the example we've looked at, we talked about a strike price on Microsoft for a cash secured put at $225, which means for 100 units, you will require a collateral of $22,500. That is, if you get assigned, you have to pay $22,500 to buy 100 units of Microsoft at $225. And we said that the premium that you will receive was 50 cents. 50 cents multiplied by 100 units would give you $50 paid to you. This does not factor the fees, so you probably will receive a little less than $50. The contract period is 10 days. That's from the 20th of December to the 30th of December 2022. And if you are unassigned, that $50 will translate to a 0.22% return on your $22,500 collateral. And this translates to an annualized return of 8.11% for the collateral you're putting down. What that means is if you make $50 every 10 days on a $22,500 collateral, you will generate 8.11%. If you are assigned, however, your real cost is the $22,500 that you put down to buy, less the premium you received at the beginning of the contract, and that translates to a $22,450 cost basis on your purchase if you are assigned before the expiration of the contract. Right, let's visualize how this would look like on OptionStrat. And this is the beauty of this tool. So you go to optionstrat.com, you click on the build drop down, and you select the cash secured put. And if you see there, it says that the cash secured put is an income generating options trading strategy. If you click on it and you enter the ticker symbol, in this case we were talking about Microsoft, then you can select your expiration date and you can drag the pointer to your target price. In this case, we said we wanted the 225 strike price, and then you can increase the range, and this will show you at what point you would probably be assigned. So as we can see here, what it says is that you start losing money when the price of Microsoft drops to the $222 mark, which in effect means that you will be assigned and you will have to buy Microsoft at that price. And if the price of Microsoft keeps dropping, then you have lost money. But that's the beauty of option strats. You can pick different contract dates and it will change effectively what the parameters are and what kind of credit you should expect to receive. You can also drag the pointer to select different strike prices and the graph will change accordingly. And this helps you to be able to visualize how you want to execute on this particular strategy. You can also click on the positions tab and you will be able to see the summary of the transaction. In this case, you're selling to open one Microsoft put contract that will expire at so and so date, and this is the premium that you will receive. So there we are. This is how the OptionStrat website helps us to be able to visualize one of my favorite options trading strategies, which is the cash secured put. Thanks for dropping by. If you enjoyed the video and you haven't subscribed, please do that favor now, please, and hit that subscribe button. And while you're at it, hit the notification bell so you get to see new content as soon as they're uploaded to the channel. If you like what you heard and saw, hit that like button for the YouTube algorithm and share with anyone on your social feed who you think might need to see this video. You can also check us out on Twitter and Instagram.